Let's go over one good losing trade I made yesterday. I actually stopped myself out yesterday in this BABA trade. I thought it was a good trade. I want to go over it. I think sometimes we can actually learn quite a bit from the trades that don't work out for us. And sometimes people like me only talk about the trades that work, and we should really be realistic about this game and talk about the losing trades, even if they're good losing trades. And I actually got this idea from Linda Radke when I was writing the playbook. I went to go visit her and I told her about my second book, the playbook. And immediately she said, you got to write about a losing trade. So for those who don't know, Linda Radke is a very famous futures trader. Does anyone not know who she is?
I know who she is.
Yeah, I would think everyone knows who she is. And so in her office in Chicago, she came up with this idea. We implemented it into the playbook. There is a chapter where I actually show one good losing trade. So on that theme, let's talk about one good losing trade. So I actually didn't get a chance to trade on Wednesday because I was looking at schools for my 15-month-old child, which is actually what you do in New York City, for next September. So we were going on a tour of a private school, and we actually got a signal in this BABA that I've been waiting for, we've been talking about for a while. I wanted it to get below that 88.60 level, and we were watching that level for a really long period of time. It couldn't trade below that 88.60 level. A couple of times it sort of leaked below there, but it wasn't real. And we were saying, hey, if it, Raj, remember we were like, I think we were talking about this, Matt, if it gets below this 88.60, holds below this level, let's go after it on the short side, and it should go and find its next support level. IPOs, the technical levels, are very important, right? So below that 88.60, you got to go find the next support, which you should see. It should go down until you actually see the real support level. And so on Wednesday, it got below that 88.60, and it went all the way down to 86 bucks. And what happened to 86 bucks? You saw the support, right? So Thursday, yesterday, what was my thought process?
Watch 86.
Yeah, watch 86, right? It's kind of like a second day play. Second day technical play, gets below 86, let's have at it, let's short it. If it's really holding below it, let's get aggressive. And I did. Okay, I got really aggressive below 86. And what do we see? We talked about this yesterday. I thought it was one good trade to start a position. I had started my short position before 86 because I saw it rolling over. And then when it got below, I was about tier 1.5, and then when it got below 86, I was tier 3. It was holding below 86. It was below there. I thought this was a good technical trade, a good second day technical trade, and I ended up getting stopped out for the day. So remember we talked about this yesterday, right? It got below that 86, and what do we see on the tape? Very instrumental. It was so strong on the tape. When we see a stock get below a technical level, we want to see it drop out. So on the tape, you want to see the bids dropping really quickly. You want to see it go down very fast. You want to see people hitting the bids. On our charts, you want to see that big red candle. You want to see a volume spike below that 86. So if you're not a tape trader and you're just looking at charts, you got to see that deep red candle with the volume increase. If you're watching the tape, which we do here, you got to see hitting bids, offers stepping lower, offers close to bids. What do we see? Paying the offer, paying the offer. Every low offer that came in, there was automatically spraying of the offer. The offer was very far away, unusually far away from the bid. And it wasn't dropping that fast. It went down to like maybe 60-ish cents. Maybe kind of went down 40 cents. That's not the drop we expected below that 86 level. At a minimum, you're looking at 85.25 at a minimum to sort of see that down move that you really wanted. And you want to see that offer close to the bids. You want to see people hitting the bids, and we didn't see that. And so I was smart enough. 70 cents really came down and held an offer. That was sort of the key inflection point. 70 was really being tested. They were really paying him hard, really paying him hard. He wasn't lifting, but then he did lift. That was sort of the signal that you were probably not going to be right on this technical second day trade. 85 cents gave it a little bit of a chance as well, tried to sort of hold it up a little bit. That lifted. When that lifted, you were going to be wrong. I took off. I was smart enough to take off at least half there. But then even doing that, I took a pretty big rip. I ended up sort of getting out higher and higher and higher. I got out of another half above that 86.35 area. I got flat above 86.80, that 86.80 area. So it was a big rip. I like the trade. I would put the trade on again, but you got to watch what's happening below levels. You really want to pay attention to tape or to charts or to tick charts below important levels. You should expect certain things. And if you don't expect certain things, you got to get your stops tighter. Okay? You got to be prepared mentally to be wrong. Okay? You might even think about lightening up a little bit if you don't like the tape or if you don't like the chart below a particular level. All right? Your good trades are going to come, but you got to be careful about not losing too much in the ones that didn't work out. So, I think that looking back on it, that the tape, what it looked like, is ingrained in my head. It wasn't what I wanted to see. I think that I could have been lighter when I saw that. I could have, particularly above that 71 cents, I probably could have gotten down to tier 1. I think I could have even been tighter with my stops above 86 because of the tape below 86. And even prior to that, remember how strong it was at that 86 level? It tested that 86 level, it held it, and it popped back up pretty nicely prior to that on that day. So you're going to have losing trades. You want to go back and learn from them. My takeaway is, 1, got to watch what's going on below the technical levels. And 2, you should think about a system for not having as much risk on when you don't like what you're seeing. Okay? Bad trades are going to happen. Well, losing trades are going to happen. I wouldn't say this is definitely not a bad trade. Losing trades are going to happen. Even with a good system, we're barely going to be right more than we're wrong. Our job is to control risk. I have to make sure when I'm looking back at my work that if I make this trade and I'm right, that my gains are a good 3 times what I lost yesterday. I got to go into my S&B Performance Center, tag this trade, and make sure the next time I make this trade, my winners are 3 times at a minimum what I'm losing here. Okay? All right. I'm sure you guys have had a couple of losing trades and will in the future. I know I will, but I hope that helps.